Snipers, you have to see what's happening to the Bitcoin price this Sunday, as it's Super Bowl Sunday, Valentine's Day is tomorrow, and the Feds have an emergency meeting in less than 24 hours. So I decided to get an early update out to you guys while I'm at the gym, because I had some thoughts on a lot of what I'm seeing on social media being bearish. And I think that some people forget the fact that the same way that greed works when price is high, greed could also work when prices are low. People continue to want lower and lower prices until they don't get those prices and we see a major fake out. The markets love to do the opposite of what everyone expects. We have a lot to cover today: on-chain analysis, Bitcoin hitting new all-time highs in hash rate, and more importantly, I want to talk about my expectations for Bitcoin in the immediate short term, the medium term, and the macro. If you guys watched our video yesterday, we talked about the potential downside scenario if we break below 40,000, invalidate the inverse head and shoulder. And we all know 44,800 is the most important resistance level for Bitcoin right now, because that invalidates the bearish pattern of the macro head and shoulder. But there's a lot happening right now and a lot of opinions just being thrown out there here on the Snipers channel. Over the last 5 years, we've made a video on Bitcoin every single day, and I've always given you guys an unbiased opinion, and we're gonna continue to do that. So remember to smash the like button for the YouTube algorithm and turn on those post notifications to get our updates first here on the Snipers channel, youtube.com/snipers, the original name. First, I wanna talk about a very positive thing: hash rate hitting new all-time highs. In the past, we've seen price correlation to hash rate. Just realize that in May of 2021, when the China ban happened with miners, we saw price action follow the hash rate down. And then since then, we've seen a full recovery of hash rate, now forming new highs. Does that mean that Bitcoin is potentially going to be able to also form new all-time highs heading into Q2, Q3, and Q4 of 2022? I certainly think it's still on the table. For those that know my macro opinion on Bitcoin, I believe in this cycle, we're gonna top out around the $150,000 to $250,000 level. Potentially at that point, we could see a bear market, an 85% correction, to maybe bottom out around the $60,000 to $70,000 level, where people think that that's an expensive price right now, will eventually be the bottom. And I believe that with all of my heart, all of my intuition, and we are already seeing institutional adoption, and we'll talk about that in just a second. So with that in mind, let's first go and look at what's happening here to on-chain metrics. Well, Clemente, over the last few weeks, we've seen a massive influx of stablecoins moved onto exchanges. Honestly, not sure exactly what to make of this. Perhaps that's dry powder on standby, ready to be deployed. Well, realize this. You can see in the blue, since January to February of 2022, stablecoins have been increasing quite substantially on exchanges. What does that mean? Well, I'm going to tell you exactly what that means and justify it with some charts in just a second. But in my opinion, it is telling us that investors are ready to buy any sort of dip that occurs here for Bitcoin. And if we do see a dip, what is the potential price targets? Where is there a good accumulation point where we're not being too greedy? Because remember, as I mentioned from the start of this video, greed doesn't just work on the price being high. It works when the price is coming down. It's like, how far down do you want it to go, right? And so we don't want to be greedy, and we always want to sell the greed and buy the fear. And with all of the fear in the market, this has been the real schematics that the S&P 500 has been following. So far, 2 weekly Renko candles closing red. This has also been the theme on social media. Super bearish, right? Let's quote this. During the last 35 years, whenever the SPX weekly Renko chart printed more than one red candle in a row, the market went either into a bear market, like in 2000, 2008, 2020, or printed a 20% drop like 2018. The SPX weekly Renko chart printed 2 red candles in a row again. Well, look what happened in 2018. See, all these bears are here, but yeah, we did print 3 red Renko candles, but then we saw immediate price action to the upside, all green. And so is this the last red weekly candle before we're gonna see that same move to the upside? I'm gonna talk about that in just a second, and why I don't believe what we're seeing right now is what happened in 2020, where there was a more elongated bear market, or what happened in the dot-com bubble, or even in 2008, where this could certainly just be fear. And guess what's even funny? In 2018, when that happened, it was also the Feds that made that happen. It was interest rate announcements, right? And we know how insignificant interest rates really are to markets. There's not one analyst, and if there is, put it in the comments below, that has found a direct correlation between markets seeing a capitulation based on interest rates rising. And we've already seen over a 20% drop for the SPX. So is there really that much more left, or is this the last draw before we see a higher low form and continuation to new all-time highs, including for Bitcoin, potentially have bottomed out at 33,000, exactly as we predicted here on the Snipers channel, by the way. And why is that important? Do you guys remember when I talked about this on my live stream? For miners right now, their break even is at 34,000 for Bitcoin. Do you guys know why Bitcoin bottomed out at 33,000? It didn't just happen because of the channel support. Miners are unprofitable when Bitcoin's below 34,000. That's their break even point. I said that before we even reached 40,000. And so that was when Bitcoin was sitting at 50,000. I told you guys the max downside I'd expect is 33,000. If you remember that, smash the like button, put it in the comments below for the new viewers to realize we're the #1 cryptocurrency technical analysis on the internet. And so with that in mind, let's look at some more charts here. Here's another cyclical chart. Banks, energy, and materials. We're seeing the highest allocation that we've seen ever, and that matches what happened right before the 2008 crash. Yeah, well, it also matched what happened in 2018 where we didn't see a crash. We just saw 3 red weekly candles before upside. Are we seeing the same print right now where we see potentially 3 candles and then we move up? Well, we'll talk about that in just a second. Now, realize this, Bitcoin dominance moving up, there's certain ways that this could be justified. And this was a chart that Drink D1 in our Discord posted. Shout out to Drink D1, one of our premium members on our Discord. And right now, this is what I believe we're seeing right now with Bitcoin dominance. Bitcoin dominance is increasing, and Bitcoin is also sort of increasing, at least in the immediate short term. Over the last few days, we've seen Bitcoin dominance increase and price increase, right? We went from 33,000 now sitting at 44,000, while altcoins are decreasing. So what do I mean by that? Well, do you guys remember from our video yesterday or 2 days ago where I addressed the 6-hour volume on Bitcoin? This is how we predicted that 44,800 was going to top out, where we saw a third spike of institutional volume. For Bitcoin, it was a buy candle that came in. It was a green candle, but then for Ethereum, it was a red candle. And that was the first time Ethereum saw a red candle versus a green candle. The previous 2 times it saw buy volume, just like Bitcoin when it comes to institutional timeframes, like the 6-hour, which we love to monitor as an institutional time frame. And so we saw the alts sell off there, and then we haven't, been blindsided by this. We've been monitoring the Ethereum to Bitcoin chart. We knew that we were finding resistance. We knew that we were coming towards an important level. I told you guys that if we saw a rejection, that would be a big puzzle piece for not just Ethereum, but even the altcoins outside of Ethereum, which this chart shows you. You can see we're starting to really test the support level for a 6th time, where if we break this support level, if we were to take a target here, we're looking at a pretty massive drop here for altcoins dominance against Bitcoin. Now, just like in 2018, when we saw others' dominance come down, we have to realize this is a different market cycle. So in 2018 and 19, we did see others' dominance start to push down, right? But we also saw the Bitcoin dominance chart correlate with the DXY. We're not seeing that this time around. Do I believe we're going to see a drop here for others' dominance? Well, I think it's certainly on the table. Fundamentally, sound coins will always be safe. And let's say we do see a 35% correction here with others' dominance. I mean, what is it, sitting at 34%, and we see a 35% correction, a 20% dominance? That could totally just clear all the fat in the market, all of the SHIT coins, the ones that don't have fundamentals, and we still continue further up. It doesn't justify downside in the market. It's just a dominance chart, right? And so dominance doesn't factor price in, and it's certainly not a strong indicator. I don't think that we could really make too much of a strong assumption here about what dominance is telling us. Now, we're going to talk about Bitcoin's price. We're going to look at some charts here, but I want you guys to realize this. On the bullish side of things, on the 3-day chart, we have a MACD crossover fully confirmed. The last 2 times that happened, Bitcoin not only bottomed out the first time in July of 2021, but it also, the second time, formed new all-time highs after seeing that MACD crossover on the 3-day chart. And we're seeing the exact same print right now. How could you tell me that's not bullish, right? If you only pay attention to the fundamentals and you get caught up in these narratives, the Ukraine and Russia narrative, the Canada mandate narrative, the interest rate narrative. Well, what happens after tomorrow? Okay, finally, we get the interest rate hike, right? What happens now? There's nothing else, right? Let's say a war breaks out in Ukraine and Russia. Okay, we understand. What's going to be the best hedge during geopolitical uncertainty? Where would you rather have your money, in currency backed by a government or a currency that's decentralized, you can take anywhere in the world? I mean, being in Bitcoin is actually exactly what I'd want to do in any sort of geopolitical tension or uncertainty. And so I think that is proven by the fact that long-term hodlers have held their coins. They haven't been selling. And so, matter of fact, Bitcoin supply and exchanges are hitting new lows almost every month. And so, with that being said, the fundamentals are still clear for Bitcoin. Hash rate hitting new all-time highs today. Fundamentals are strong. That's the real deal, not the narratives that people put out, not what the news is putting out. That's going to brainwash you, right? And so, with fundamentals extremely strong, on-chain metrics extremely strong, and technicals extremely strong. Let's put those three on one side and then put all the news on the other side. From what happened in 2020 and 2021, if you haven't already learned your lesson, I wouldn't be trusting this side. I'd be trusting some of these more solid fundamentals and pieces to the puzzle. And so I just want to throw out this opinion here. And then look at this. In 2013, we saw Bitcoin with an exuberant rally correct to the 0.618 Fibonacci level to then form a higher low at the 0.5 Fibonacci level to then see a massive spike to the upside. And guess what we're seeing right now? Same exact schematics. 0.618 initial correction after exuberant rally, 0.5 higher low so far. I've already seen so many indicators confirm that this could certainly be a higher low. There is a case to be made that this is a higher low. There's certainly a case to be made. And then look, as I've been saying, the macro target, 150,000, 250,000, is that still on the table? I think it's highly likely. And so the main point of today's video is to just kind of give you guys an understanding that yes, there's an emergency meeting tomorrow, but all of this has been scripted. It's narratives that are just being put out there on the news to get watch time, viewer attention. And I'm even seeing people on social media that have never invested in stocks in their life now saying, oh, I'm holding cash because I'm expecting in March a big drop because interest rates are being increased and all this stuff. So when everyone is acting like the genie, you want to do the opposite of what they're saying. And if you haven't learned that lesson already, you're going to learn it at one point or another. For those that have been tuning to the Cypress channel, we're always on the opposite end. If everyone's bullish, we become bearish. If everyone's bearish, we become bullish. Has that worked out quite well for us? I certainly think so. Does that mean that we don't follow the crowd in any way? No. Let's say we do see a correction with Bitcoin. I'll talk about the potential of where we could land, but I'm not going to sit here and say we're going to cross back below 20,000 US dollars and enter the matrix that we were in 2 years ago before the Feds printed 20% of all US dollars in less than 12 months. No, I think that there's a bottom here very soon. For those that took our long-term entry position at 33,000, we took that on the initial test. We even took a margin trade long position at that initial test of 33,000. If we come and test that level a second time, now everyone's expecting it. I think it will break. I'll talk about the potential downside scenario of 24,000, let's say. But the point is, it's not on the table right now. Bitcoin, of course, right now, 44,800, 41,950, most important range to watch for Bitcoin. That's what the game field that we're playing in. And then if we breach 41,950, we have a potential of seeing the $38,000 level come on the table because that becomes the new range. But if we don't see decisive bearish candles below 41,950 when this Fed's announcement comes out, it could be a big fake out. And so I want to talk about that in just a second. So it's never a bad thing to take short positions. For those inside of the Discord group, we have the #1 cryptocurrency Discord in the world. We have the #1 trade signals in the world. We're taking short positions on altcoins. Dusk USDT hitting all targets. Harmony took a short at 19,100, hit all targets. And so short-term volatility is certainly fine to take advantage of. As a matter of fact, a lot of people are putting puts on the SPY right now, right? Which means they're shorting the SPY. We're seeing puts on the SPY at levels we haven't seen since March of 2020. I mean, these are the times that you want to be in the market, right? Do you not remember March of 2020? I mean, those 3 to 4 months back and forth, I would have loved to have a position in the market between that time, right? So you buy the fear, you sell the greed. And that's the main topic of this video. And then the secondary topic is the fact that you have to realize greed doesn't just work when prices are high. It also works when prices are coming down and people wanting more and more discounts, more and more discounts. That's also greed. And so we can't be too greedy here. And let's just dive into some charts. We'll wrap up this video. When we look at Bitcoin right now, we're testing 41,950 like we've never tested it before. And we know right now here on the Snipers channel, we're waiting for hourly and 4-hour confirmations below 41,950 to assume any further downside, and we have a plan. And so far we haven't seen any hourly or 4-hour candles decisively close below 41,950. The numbers on our charts are always the most important levels to the dot, and I'm talking to the penny. You guys know how adamant I am about being to the penny. Why does it matter, by the way? Well, do you guys remember what happened to the S&P 500? We formed this initial high here at 45.86. This high was at 45.85, just $1 off. And I told you guys on that day, because we closed $1 off, that we were most likely gonna see downside. That was a failure, right? Literally $1 off, and that was the confirmation we needed. So you better be paying attention to the exact prices. If you're just paying attention to boxes and zones that analysts are putting out there, you're never gonna get a good understanding of the immediate short-term and medium-term price action, because those are very macro and levels where we focus on not just the micro timeframes, but also the macro. And so when it comes to what's happening right now, daily chart, no big deal. We're sitting at this 50-day moving average. I am not concerned with Bitcoin at this 50-day moving average. Why am I not concerned with Bitcoin forming a flag at the 50-day moving average? Well, this was, number one, a major checkpoint for the bulls to reconquer if we wanted to see a reversal and a potential bottom. And so far, we've held it. And so we haven't seen anything decisively close below it. We have to expect this scenario coming into Monday. And that's the fact that the shorts are going to want to eat. And so if everyone wants to get fed at the table, there's a potential we could see a quick dip down before the breakout. And what does this actually justify? An inverse head and shoulder pattern, right? And so we've been talking about 40,000 being the most downside that we'd want to see here on the Snipers channel, to assume this scenario could still be on the table, to then break out above 44,800, which, why is that so important right now? As you guys know, it's important because we have a head and shoulder pattern that has formed since August of 2021. We have yet to break the neckline. And with an inverse head and shoulder pattern, if you don't break the neckline on the retest, that justifies more bearish action. And so we have this head and shoulder pattern. Here's the neckline, and we are rejecting it, right? As you guys know. And so why is it important to get above 44,800? Why is this move here so important? Because we need to take this bearish scenario off the table. If this is a rejection, my confirmation of that is below 40,000. If we come below 40,000, here's my max downside that I'd expect for Bitcoin. This would put the miners in the red. They wouldn't even be profitable anymore. And this would probably be a very short amount of time that we'd stay here. As a matter of fact, if we breach below 40,000, I don't think this is going to be a capitulation move. I think it would actually take quite a while for this to happen. I think we'll initially come down, fake people out here back at the $34,000 level before slowly grinding down to bottom out completely. Maybe once interest is kind of waned off here, as people realize that Bitcoin is at an extremely discounted value. So that's why these scenarios are extremely important now. That's why this range is so important. We get above this neckline, then we invalidate the pattern, and now we can test the 200 and 100 and then form support at the previous neckline, invalidate the bearish pattern to not expect that downside. And so that's some food for thought. Now, what also piques my interest down at this level here, $24,000 to $25,000 level? Well, there's also a CME gap down at that level. And what's interesting is this recent bottom for Bitcoin at 32,930 was a CME gap fill, literally exactly to the dollar. And so that's why that potential scenario is on the table. Maybe that's what US dollars are on the exchanges waiting for. But does that mean we'll see it? No, because remember, greed works on both ends of the equation. If everyone thinks that the CME gap is going to be filled, it's probably not going to be filled. By the time Bitcoin is even, getting towards that level, it's going to reverse. And so the point is, we're seeing deep value in tech, and the inflation that we've seen over the last 2 years, in my opinion, is not transitory. Jerome Powell has stopped using that vocabulary with recent Fed minutes that have been released. And so we have to realize that businesses are adapting to this. They are raising wages. Florida is raising their minimum wage right now. And so if we see inflation come down, it will be very minimal. And Bitcoin at this point has already reacted to inflation. And it's in a new matrix. And for the last 3 cycles, it has never breached an all-time high after breaking an all-time high. Only in 2012 did we dip below the previous all-time high. So whoever's saying 10,000 and 20,000, I think is a little bit delusional. And that's called greed. And so the same way greed works on the prices being high, it works with the prices being low. And with that being said, guys, just remember, board meeting tomorrow for the Feds, February 14th on Valentine's Day at 11:30 a.m. Let's see what happens. We're going to see a lot of volatility. We never trade the volatile news. That's why when the Feds announced the CPI rates and we saw markets go whoop, whoop, it cleared shorts and longs. We actually took the short at 44,800, the first test, because that second test, you're not going to get it. The probabilities become a lot less. You all know, for those that have taken our course on Traders Profit Club, if you haven't already, #1 Discord community, #1 course in the cryptocurrency community. Link is in the description below. Thank you all for tuning into Sniper's channel today. Happy Valentine's Day. Super Bowl is tonight. Hope you guys enjoy your time with friends and family. If you're not celebrating, then tomorrow's Valentine's Day, so happy Valentine's Day to you. It's also going to be Monday and a Fed's emergency meeting. Let's see what happens. I'm expecting, check this out. Turnaround Tuesday, right? Remember that. Fed's meeting Monday, we drop. That's the last hit. We at least form a higher low. What I'm looking for with the S&P 500 is a higher low, and then turnaround Tuesday comes, and then we bottom out. And I think that would be the best case scenario. So I do want to mention this is very important. I really want to see the S&P 500 as Monday opens up move above this 200-day moving average at this point. It's extremely important that we get this move back above the 200-day moving average. If we don't get that move, then maybe on Monday we could see the final dip before turnaround Tuesday. The point is we get above 44.50, or let's say 4450 on the E-mini futures contract for the S&P 500. That's the main point. So I think that's what I'm expecting. I'm expecting maybe a short-term reaction. The shorts get fed, and then we continue further up for turnaround Tuesday. I don't know. I'd love to hear your guys' thoughts in the comments below. Shout out to Will Clemente. You've been posting some amazing on-chain analysis. Remember to smash the like button for Will Clemente as well. And if you support this content, and I'm going to get back to my workout. I just really felt the need to get this video out after reading some things on Twitter and seeing a lot of bearishness. And I always give you guys an unbiased opinion, as we have for the last 5 years. And I appreciate each and every one of you snipers tuning into the channel. Thank you so much. And until next time, snipers